Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on Chalet Hotels. Our analyst retains positive stance on Chalet Hotels with potential upside of 15% over the next 12 months. Business leisure segment has seen strong room demand in key cities, helping Chalet clock strong RevPAR growth of over 25%. RevPAR, which is revenue generated per available room, is likely to grow in double digit with limited supply in key metros, especially in leisure hotels, in the coming years. Top 4 hotels in portfolio cumulative contribute Rs 50 to 55 crore to EBITDA on increase of Rs 1000 in room rentals. This, along with incremental profit from new hotel and annuity business, will drive profitability and cash flow ahead. Debt will peak out at Rs 2800 crore by FY25, which will cover capex need for next 2 years. Debt should continue to reduce from FY26 without any major inorganic initiative. Strong growth prospect and attractive valuation of 16 times FY25 and 14 times FY26 EV by EBITDA makes it a good play in hospitality space. Next, we have an update on Bank of India. Our analyst maintains buy rating on Bank of India with a price target of Rs 135. The stock continues to outperform on the back of sustained improvement return ratio profile, aided by strong asset quality trends. Strong sector tailwinds are supporting overall performance. ROA in second half of FY24 is expected to reach 1% and is likely to sustain in the near to medium term. The bank has been highlighting that the quality of loan sanctions and disbursed in post-COVID times is far superior, with very low delinquency. Thus, lower slippages trend is likely to sustain and narrow the perceived gap in underwriting with respect to peers. Valuation are still reasonable considering the improvement in ROA trajectory. Valuation are expected to inch higher as the return ratio profiles improve in the coming quarter on account of stable loan growth margins and lower credit cost. The bank balance sheet has further strengthened after the recent capital raise. Capital ratios are healthy with CET1 capital at 13.8%. Post-capital raise versus minimum require of 8%. At the current market price, the stock currently trades at 0.7 times FY25 and 0.6 times FY26 adjusted book value estimates. The stock has outperformed the broader indices in the last 12 months. For more detailed disclosures and disclaimers, please refer to our research report or contact our nearest branch. Please read the risk disclosure document issued by SEBI and relevant exchanges and terms and conditions on sharekhan.com before investing.
Thank you for watching. To keep up with the latest from Sharekhan, make sure you subscribe to our channel. You can also download the Sharekhan app for all your trading and investing needs. Investment in securities market are subject to market risks. Read all the related documents carefully before investing.